Welcome, my name is Vincent Luce with Forex Trading Institute. Please take a couple minutes and go over the following risk disclosure. Lesson number 9, Trading Fibonacci Convergences. In order to get an edge in the market, you got to sharpen your skills and your edge will appear. And the more you learn, the more strategies you learn, the sharper your trading is going to get. The best tool in this market is your education. Now, we're going to go over trading Fibonacci convergences. The market moves in waves, and these waves are called price swings. In an uptrend, swings will start at a low and stop at a high, and the ABCD turns into a new AB. Look how the market did an A, B, C, D, and then this whole swing turns into one big AB. Okay, this is the large swing, and these are the small swings, and it all starts at a low. And we can see this here. Look how the market did A, B, C, D, and then this becomes one big A, B. Now, if we see this, and there's going to be several swings, the market does an A, B, C, D, then it does another A, B, C, D, and it becomes also one big A, B. Okay, one large swing. And we could see here, look how the market did A, B, C, D, A, B, C, D, and then we could make this one big A, one big B. Now, when combining these smaller price swings and merging one with larger price swings, we're trying to find a convergence, perhaps a 382 with a 618 that converges at the same place, the C. So we find a larger price swing of AB that will consist of smaller ABCDs. Then we find the most recent ABC, and there should be a convergence with a Fibonacci number. We could also find a convergence with a pivot point level. And we enter a C and then go into the large ABCD and find a large D extension for taking our profit. Now we look at here and we see the big ABCD. And we could take a Fibonacci from this AB, and then we take a Fibonacci from the small AB and find where does it converge. For example, here could be a 382 and a 618. If there's a place where they converge, that makes it an increased probability of where that market wants to bounce. And we could see it here. Look at the market. Okay, it did an AB, and then this AB, and we had a convergence at a 618, 382. And it did a bullish engulfing at that convergence, and then the market took off, and it was a nice reward for a small risk. You're going to see these Fibonacci convergences are a very valuable tool. Now, you could find a convergence and a potential bounce by, we could merge these swings. Okay, we merge all the swings into one big AB, and then we find the small lows of the small A, B, C, D. These were the small A's, A, B, C, D, and then this would be the other A would be a low, A, B. Now, how do we do this? You see this, we do one big A, B, and for example, gives us a 382. Then we get this A with this B, and you can see this in this yellow line, and we get maybe it'll be a 50%, and then we get an A, B at a 618. So we have a convergence of Fibonacci. There's a lot of numbers that increases the probability that there's where the market wants to bounce, especially if it's combining. It might be also a trend line, or it might be a past support, future resistance, or a pivot point level. Okay, so we could see it here. Look how the market did. We throw the Fibonacci from A to B. Then we throw the Fibonacci from this low to the B. Look how the B stays the same. The only thing that changes is the lows. And then we throw from this low to here, and this low to here, this small AB. And see how we see a convergence. We see a 382. 50%, 50%, 786, that tells us that there's what the market wants to buy. Here's where we want to put our buy order. And look how the market went back there, activated the buy order, and then it took off to the extension. And look at the extension also had a convergence at a 618 and a 27. So we find the big AB, okay, we look for a C, and then we just throw Fibonacci from A to B, A to B, A to B, and we see if there's a level where all these are meeting. Okay, now we're going to find a convergence in the downtrend works exactly the same way as in an uptrend. Okay, the A, B, C, D swings, remember they just go the opposite way. The A, B, C, D, and it's all inside of this big A, B. And we could see this is a small swing. For example, here, we have one big A, B, but there was a small A, B, C, D, and then we had a small A, B, and we're looking for that C. And there could be several swings. Look how we had an A, B, C, D, A, B, C, D, but it's all inside of this big A, B. Now let's look at this in the market. Look how we have this big A, B, and we're looking for this C. We would throw Fibonacci from this A to this B, and then we just find the highs. This is a high A to B. The B stays the same. We just look for another high A. The B stays the same to B. And then we find this high A to B, and we see if there's a convergence at this level. Especially, look how we have the A, and we have the trend line here. So we would find out, we would want to find a convergence at this trend line. Okay, and you can merge to find the convergence this big AB with the small highs. Look how there's 1, 2, 3 small highs, and there could be several highs, and we just want to find these highs inside of a big AB movement. And we could see it here. Look how we have this A big AB 382, AB 50%, and then we have the AB 50%, and we have the AB 618. There's a convergence. It doesn't matter. They don't have to all match up 618, 618, 618. They can just be all where they line up. Okay, and we could see it here. We throw the Fibonacci from this big A to this B. Okay, here's our Fibonacci tool. We just grab it and go A to the price of B. And I recommend to put a line here and a line here. So all you gotta do is grab this A to this B, and then once we grab this A to B, we just throw it from A to the price of B. Then we throw it from the from here, from A to B, and then we throw from this A to this B, from this A to this B. Look how the B stays the same, and then we throw from this A to this B. Okay, and then look how we have a trend line here. We find a convergence. Here we had a 786, 618, 618, 50, right at the trend line, selling it to the market wants to go to this area, bounce. So we want to sell and go short at that area. And then we also have a convergence to take our profit. Look how we had 1, 2, 3, 4. They're all converging at the same area. We would take our profit, remember, above. I like taking it above that area. So the market came down, we would have taken our profit, made a nice trade. So this is a very valuable tool. You want to review these CDs several times to understand trading convergences. It's just small ABCDs inside of one big AB, and finding these small swings where the Fibonacci numbers converge. Rules to trading a convergence: we find and we draw the trend lines, inner, outer, and long term. This will help us determine if you're in an uptrend, downtrend, okay, or we're in consolidation. We find the latest ABCD, and we find the large AB. Then we find the B as your pivot point and start spreading your Fibonacci. To remember that B is the point that stays the same. So we go from B to the low of A, B to the low of A, and we find all the different low points. And we find a convergence, any combination of 382, 50, 618, 786, 816, and especially if it's in the direction of the trend, especially if it's converging with a trend line or a past support, future resistance. We pull out our trader's checklist, we create a trading plan, and we trade that plan. If your stop order is over 50 pips or it's over the 5% limit, then we pass on that trade. Okay, my name is Vincent Luz with Forex Trading Institute, and I'll see you at the next lesson.